Yeah, I guess everything's good to go. So then we can begin this week's Technical Tuesday session. Thank you guys so much for coming, and thank you guys for watching this Technical Tuesday session where we try to analyze the Euro USD or the fiber and the US dollar Japanese yen and try to identify some high probability trading ideas or setups in those particular currency pairs. So good morning, Paul. Thank you for coming. Paul is one of our VIP members. But with that said, I guess we're going to move forward and start talking about these charts. And we're going to sort of review what we mentioned last week. I know last week we had a good opportunity in the Euro USD. Price was bearish. It was exactly what we predicted. Price fell from these highs up here, and we saw a bearish rotation in price take place. We saw price fall and expand lower, and it fell and it retested this descending channel support because we could see here that we have this descending channel that formed in the market. Price at one point was moving in a ascending channel, but we saw this bearish rotation in price. We saw price sort of turn and pivot to the downside, or it had a bearish rotation right around here, and it's been falling lower, making lower lows and lower highs ever since. But price has been moving lower, and it's been moving lower within this descending channel. So then our bias for this pair is to be bearish the Euro USD. We want to look for opportunities to sell the Euro USD on pullbacks in price. And what we believe is that we should see an expansion or an extension lower all the way down to the $1.10 level. Like, I know we talked about this for the past few weeks. We're still expecting for this pattern right here to play out, because what we saw right here in this ascending channel and in this move lower is a bearish flag pattern. And a bearish flag pattern is a trend continuation pattern. And for a while now, the Euro USD has been bearish. Even if you go back, you can see that we have been bearish on this pair. You can go to the weekly chart to see that more clearly. But based on the technicals and based on what we typically know as far as the market moving symmetrically and harmonically, we can expect an expansion all the way down to a $1.10 level. Now, of course, somewhere around here, $1.10, right around this area. So then that's where we can eventually see price potentially fall to. But, we can't just go off of that notion. We have to trade what price is giving us at the moment, because anything can happen. And right now, we're seeing this current daily candlestick, and, you can see that this candlestick it hasn't closed yet, but is looking sort of weak. It's looking like we could see sellers positioned right around here in this area, and that's exactly what I predicted. But what I'm going to do right now is drop down to a smaller time frame, and I'm going to drop down to the 4-hour chart. Okay, so as you guys know, especially if you're part of our group or if you're a part of our free Telegram channel where we give signals and trade ideas for the Euro USD and the US dollar Japanese yen, you should know that we did enter a short pretty early, but we did get stopped out. Price ended up being more bullish, or we saw a deeper correction in the Euro USD. And I don't know if you guys can recall, but remember I said that I believe we could see a deeper correction higher between 1.1273 or 1273 and a 1.1293. But somewhere within that zone, we should see a particular rotation in price take place. And I believe we could be seeing that right now. Price rallied, and it went all the way up to the 1283 level, which is within that zone that we isolated and identified in the signaling room and even over email. I believe we mentioned it over email as well, that we should see a sell opportunity form somewhere within that particular zone that we identified and isolated in the group. So then right now, if you look at price action right now, we see what appears to be a bearish candlestick. Of course, the candle hasn't closed yet, so then anything can happen, but this is a sign that we could be seeing a rotation lower. Really, what we want to see, if you know anything about price action and about candlesticks, what we really want to see is a break and a close. Let me just draw this in. A break and a close below this low right here, which is around 1251, you could say. If we can get a break and a close below this 1251 price level, then that would be great, because that would be a clear bearish signal. But what we can also do is do this, because if you look at the nature of this pullback, it was not smooth. It was more complex. You know, they had areas of, you know, congestion and consolidation within this pullback. So then what we could do is go to a smaller time frame, like the 1 hour, and see how price made its way up to these highs. And you can see it was more of a structured pullback. There was structural levels that was created. So then this is what we could do based on what I'm seeing right now. If we draw a trend line from this low all the way up to this high, with, you know, testing these major support levels right here. So then we have you know, we have this ascending trend line support right here that's testing the low. And what I'm going to do is clone this line, and I'm going to drag it up here, because what we could see here on the 1 hour chart is that we have a ascending channel on the 1 hour chart. Now, if you really want to be safe on your trading decision, what you can do, if you really want to play it safe, is wait for price to break and close below this ascending trend line support, or this channel support on the 1 hour, and then wait for a pullback and a retest of this channel support as resistance before you decide to go short. And you can trade all the way down to these lows right around here. That's what you can do if you want to. You could do something like that. However, if you wanted to, you could just wait for a clean break of this low, of this area right here at 1251, and then wait for the pullback there. But it'll be more safer if you wait for the break of this trend line. So then that's what we're looking forward to on the Euro USD. We're looking for that type of price action to form in the market, but our bias is still to the downside. You know, we haven't aborted our bias. Ever since last week, we were bearish on this pattern. So then we still want to be bearish on the Euro USD, unless we have something that would tell us to do something completely different. Yeah, and yeah, good morning, everyone. This is Marvin. I want to sort of interject because, of course, this is a technical Tuesday. We primarily discuss currencies on a technical basis rather than a fundamental basis. So now I just kind of wanted to make that clear, because, of course, this move lower, even though there's a technical argument and justification for why we may see the US dollar strengthen in comparison to the euro, that is still contingent upon the policies moving forward in the forward guidance of both central banks, both the ECB and the Federal Reserve. And as you know, within the past week and a half, or really 2 weeks, we've been seeing both major central banks and both economies move towards accommodating and adopting a more easier, monetary policy, and embracing stimulative measures, or even remaining patient on hiking rates. So then one thing we do know, the Fed is decided just to hold off, pump the brakes and just remain patient until they see further signs of things getting better, until also some of the looming geopolitical concerns like the US-China trade negotiations and even Brexit, until there's clarity concerning those issues, which could also, affect currency prices. But with the ECB, on the other hand, they're actually adopting stimulative measures. They're going into their toolbox and they're implementing programs like the TLTRO, like the long-term refinancing operation, and others to help stimulate the money, stimulate the economy, and this in turn will weaken the euro. So then, of course, right now on a fundamental basis, we can see that the idea or notion of the euro weakening faster than the US dollar is pretty certain. So then we should definitely see a move lower in this pair as the euro falls and continues to fall, as some of the issues in the eurozone economy continues to come to the surface as the year moves on, because we still have to address budgetary issues in Spain and even Greece as well. So then, as the year goes on, we may see these issues come to the surface. But for the meantime, Brexit is weighing on market sentiment. We see Fed, central bank monetary policy adjusting and them becoming a little bit dovish. So that builds a case for us seeing the possible slide lower in the Euro USD as the Euro weakens a little bit faster, at a faster pace than the US dollar. So then, yeah, so I just kind of wanted to point that out, because some of you may be thinking, okay, why is he buying the dollar since the Fed is actually embracing a more dovish position or remaining patient? And it's primarily due to the fact that the US dollar will not be weakening probably as fast as the euro.
Yeah, fast as the euro.
Especially if you got Brexit concerns still weighing on financial markets, as well as some of their own domestic sovereign issues that they still have to work through.
Yeah. And, one thing I want to point out is that, of course, like for today, it's pretty apparent if you look at price action for today's session. And when I speak of today's session, I'm speaking of, ever since the opening of the, Australian, New Zealand trading session, which in our time, it was yesterday, 4 p.m. Central Time, 5 p.m. Eastern Time. You can clearly see that the euro has been favored. The euro has been rallying. But you have to put everything in context. You just can't look at what's been happening with the euro just for today and just say, oh, the euro is bullish, or, that particular currency is bullish. You have to look at everything in context. So then you have to look at the larger time frames and get a larger time frame perspective before you decide to do anything. And that's what I believe is the problem with a lot of traders. A lot of traders really don't do multiple time frame analysis. They don't look at the chart from a macro perspective, like the weekly, the daily, and then work their way down. Because if you look at it from a macro perspective and get a larger picture of what's going on, then you'll have an idea on what could potentially happen in the market. And in this case, we're still bearish this pair. We saw that bearish rotation on the daily, and we still want to sell the euro until we see a deviation of that particular pattern or whatever we're seeing structurally formed, on those larger time frames. But, for this pair, we are looking for a sell opportunity on a correction or pullback in price.
Yeah. Yeah, and I know, of course, later on in probably a few minutes, we have some inflation data.
Yeah, the CPI.
Coming out, which may impact the US dollar. But let's go down here and see that we have our headline inflation coming out. We're expecting 0.2% month-over-month growth in the headline figure, and we're expecting sort of the same even for the core figure. This excludes food and energy. We're expecting to see an increase of 0.2% on a month-to-month basis in consumer price index, or in this inflation figure. So then this would definitely have an effect on the US dollar on an intraday perspective. And that's what I wanted to kind of point out. Like, even though these indicators come out, sometimes
like each individual indicator may not be enough on its own to totally drive and alter dollar bias or whatever currency that indicator or economic indicator is referencing. So you have to look at a slew of data. But in the meantime, when these announcements come out, it may affect the value of its currency for that particular trading session. So then in this case, the US dollar, we may either see the US dollar strengthen if this news comes out in line with expectation or even beating expectations. We would definitely see the greenback supported and the US dollar rally. But if we see numbers lower and it actually underwhelms or underperforms the forecast or the expectation, then this would definitely be translated as US dollar weakness, and this would be on an intraday perspective. But for the Euro USD, what I also wanted to point out, I know we don't really talk about this that much, but since you guys are on this meeting, I decided to give you guys just a free tip. But you want to look at also, on a grand scheme of things, you want to look at the U.S. Treasury yield, German yield spread, the 10-year spread on the U.S. Treasury, and then also the U.S. And the German, the German spread. So then let's do that right now. Okay, let's do that. Okay, and let me just turn this to the line chart right quick, because what I wanted to point out is that for a while we've been seeing the U.S. Spread, the spread between the U.S. and German Treasury 10-year Treasury spreads. We've been seeing them rally to the upside. We recently saw this slide lower, this weakness. But one thing I wanted to point out, when the U.S. and German 10-year spread widens, that builds an argument or builds a case for us to see a deeper sell-off in the Euro USD. So then I wanted to show how, of course, this has been moving to the upside. It's been widening. So then, of course, on the fixed income side, or with Treasury spreads, this builds a case for us to see further weakness in the Euro USD.
Euro USD.
So now I just kind of want to point that out, because there's other things you can look at. And I know we talk about a lot of this in our private community, the lab, Forex Anatomy private trading community, where we actually discuss various intermarket technical instruments, things on an intermarket perspective that can help us in our trading decisions, whether it's fixed income, whether it's commodities, whether it's just equities, indices in general. But we discuss certain things like this to sort of help us in our analysis and help us to get an idea of what we should, possibly expect or think should happen in currency. So then I just kind of wanted to point that out, for you guys.
Yeah. So then you can see here how, just like Marvin identified, it's been pretty much trending to the upside. And whenever you have that US, the 10-year spread widening, or it's trending to the upside like this, then that can only mean that we could potentially see the Euro USD weaken. And one thing you have to understand about these yield curves is that sometimes they can function as leading indicators, like the 10-year yield, and like they can function as leading indicators to what can happen to their particular currency. So then, that's the reason why we want to do this intermarket analysis and look at other things in order to support our particular bias. So then we still want to be bearish the Euro USD. We just have to wait and see for price to break certain key technical levels and to break structure, to give us a reason for entry. You always want to wait for confirmation. I think with a lot of traders, they choose not to wait for confirmation, mainly because of the fact that it could reduce your reward to risk ratio. And that is true. We could see a reduction in our reward to risk ratio, which is really the key to trading. More than anything, trading is all about having a good reward to risk ratio, or a good R multiple, because let me tell you this, guys. And I think I mentioned this before, most professional traders lose the overall majority of the time, yet they're killing it in the markets. Now, why is that? Why is it that we have traders that lose 70 to 80% of the time? Like, actually, yesterday I heard of a trader that loses 92% of the time. 92% of the time, yet he's crushing it and killing it in the markets. And the reason why is because of reward to risk, or the R multiple. That's the name of the game, guys. It's not about how often you win. Oftentimes you'll find out that the more you're willing to lose, the more you're willing to make, actually. And the reason why is because of just the concept. It works differently than our psyche, because everyone wants to win all the time. But in trading, you have to have a different psyche, or a different psychology or mentality. In trading, the more you're willing to lose, the more you're able to potentially gain, because of just the way the market moves. Like, it's kind of hard for me to describe it right now, but oftentimes professional traders lose a lot of times. Now, I'm not saying I do. Like, I don't lose a lot of times. I think I have a good winning percentage compared to everyone else. But most of your professional traders that make a ton of money, making as much as 6 figures in one trade, they lose a lot of times. But they keep their losses very small. And that's the key to really trading. Now, with that said, do we have any questions about the Euro USD before we move forward? I know we have to hurry up and talk about our next currency pair. But if we don't have any questions about the Euro, then we can definitely move forward and talk about our next currency pair, which is the US dollar Japanese yen. And what I'm going to do is go to the pair right now, the US dollar Japanese yen. And, as you guys can see right here, what we mentioned should take place in our Technical Tuesday session last week took place to the T. What we saw was price consolidate up here, and I mentioned that if we see price break and close below this zone right here that we isolated and identified on the Technical Tuesday session, and I think the low was at 111.63, around that area. If we see price break and close below this low, then we should see a bearish slide to the downside, and that's exactly what we saw in this pair. Price slid lower and encountered this zone of support right around here. Now, for our premium members, they had access to a trading opportunity where, of course, it would have hit the target. They made money off of this trade if they would have took advantage of that particular trade. I know we didn't send this trade idea to our free members, but our premium members, our VIP members, definitely had access to this trade idea due to what we told them to do in our weekly outlook video, which we would talk about shortly. Now, right now, we have another potential trading scenario taking place, because as you can see, price retraced and it corrected higher all the way up near this 111.50 level. Now, I cannot go into too much detail about what this level represents on this Technical Tuesday session. That information is more so reserved for our premium VIP members. But one thing I want to point out is that we was waiting for price to retrace up into this area right here before we see some type of bearish rotation in price take place. Yeah, or a tumble lower in price. So then, because price right now, we're still expecting price to, be bearish. We got this lower low, lower close. Price broke below this major structural key level. We got this lower low, lower close, and now we see this retracement. We see this lower high form. So then we're still expecting a slide to the downside on the US dollar Japanese yen, and we'll treat this the same way. If we can get a close below this candlestick low right here, that could be below the low of this candlestick right here. That could be confirmation that, hey, we want to enter a short and trade this lower. And you can see here that this wick right here sort of aligns to where these wicks are. The wicks tell you the story of the market, and the wicks tell you where potential orders may be positioned in the market. So then really this whole zone and whole area right here can function sort of as an area of demand or support. And what we want to see is a break and close lower on this pair to the downside. So then if we can get that break and close lower, then we could see price slide all the way down to retest these lows right around here. So then, that's what we're looking forward to on the US dollar Japanese yen. We're looking for that type of price action to take place on this particular pair. And we'll see what happens. I believe there has been some level of risk appetite in the market. Well, yeah, I don't know for certain. I didn't really look at our buys for today, but we could be seeing some rotation in price take place in favor of the yen, which would support more of the risk safe haven type trade, risk averse trade. So then we'll just wait and see what happens. Price will have to break this key level before we decide to do anything. But I know Marvin wants to share something, and once he shares it, then we may call it a day. Well, wait, let me just do this before we close out, because this pullback, was similar to what we saw before on the Euro USD. So then what we can do is this: just wait for price to, if you really want to play it safe, we can wait for price to break right now this ascending trend line support, and we can clone this line and drag this up here, and we can see that price is channeling just like we saw that channel that was created on the Euro USD. So yeah, there's multiple ways to trade this or play this, guys. Just know that we could be seeing a potential slide lower. This is what you would consider a possible bearish flag continuation pattern. We can see a break to the downside. We can see a potential break to the downside, and then for price to correct, and we can see a continuation of that slide lower in the US dollar Japanese yen. So yeah, guys, that's pretty much it. And I know Marvin wants to share something, so I'm going to let him
Yeah, I'll just make it brief because I know we're approaching towards the end of today's Technical Tuesday session. But I was going to pretty much mention, in the same way we looked at the Euro USD and we saw the spread between the German US 10-year Treasury spread indicate that we should see further sliding in the Euro USD. There's also other instruments or things you can look at for the US dollar versus Japanese yen pair. And I know on a few Technical Tuesdays ago, we discussed how the US 10-year Treasury yield could be a good indicator, a leading indicator of what we may potentially see happening in the US dollar Japanese yen. But I also want to talk about risk sentiment and the risk environment, since Melvin brought it up, and how really the US dollar versus Japanese yen has a strong, well, I wouldn't say strong, but it has a deep correlation with US equities or US indices. So then if you really want to get an idea of what type of mood or where US dollar Japanese yen should go, whether it should tumble lower or whether we should see a surge and a rally in the US dollar Japanese yen pair, then you want to look at the US indices, especially on the future side.
the S&P 500 futures.
The S&P futures, Dow futures, to sort of get an idea of what could potentially happen with the US dollar Japanese yen. Now, if we see futures slide lower, those indices slide lower, then that means that we may see a rotation into the safe haven yen, and we'll see US dollar Japanese yen tumble or slide lower. But if we start seeing signs of futures rallying and there being a surge in these future indices, then that would be indicative of the US dollar Japanese yen rallying and pushing higher. So then, yeah, we teach a lot of this intermarket analysis and within our private trading community, which we encourage you guys to join for $1 if you do have the time, or if you do want to learn more about trading and have a robust education in trading the Forex market or different markets in general. But yeah, we reserve certain things for our private members. We apologize. But yeah, this is just a brief webinar just to sort of introduce you guys to our form of technical analysis, and so you can get an idea of some of the stuff we discuss within our private trading community.
Yeah. So then it's 7:30, guys. You know, and the announcement, the CPI data came out, and I believe it didn't come out favorably for the U.S. Let's just see what happened. Let me refresh this page and see what took place. Yeah, for this particular announcement. But yeah. So what happened? What happened? What happened? Okay, so you see here how the headline number we see, of course, it remained. It came in line with the forecast with just 0.2% inflation on a month-to-month basis. But then we see a number that's below the forecast for the core figure, which excludes food and energy. We see that the inflation softened by a tick. It came in a tick lower to 0.1% month over month for inflation on, for the consumer price index. So then, of course, this would be translated into U.S. dollar weakness, since we did see this number come in softer. And you remember, whenever we see signs of softening of inflation, then just what I'm saying is that when you see those numbers underperform, then the market tries to rebalance itself, and we see the U.S. dollar try to reprice itself. So then, right now, the U.S. dollar is sliding on this news because we want to see inflation, because we need to see a pickup of inflation in order for the central bank to have reason to move towards hiking rates, or even adjusting their forward guidance towards, more of a hawkish position of hiking rates. Yeah. But then because those numbers came in soft on an intraday basis, we may see the U.S. dollar, weaken. But then this adds a case for this particular pair sliding lower and possibly breaking below this ascending trend line support right here, and even doing what we said before. We see that right now. We see the Japanese yen benefiting on safe haven flows. And then, of course, the news about the CPI news also added another level of weakness for the U.S. dollar Japanese yen pair.
Yeah. So then, in this case right here, the technicals go along, or they pretty much align with what's fundamentally happening right now. So then, this could be a good trade to look forward to. Sometime today. It could, if you want to take the risk. If you wanted to, you can enter a short now and place your stop around here. But I like to go for good reward to risk ratio. So then I'm just going to wait for the break and then a correction and then get in. But all right, guys. I know we're at the end, and what I want to do for those that are new and for those who may not know is that we do have a premium private trading community called The Lab. And if you wanted to, you can join today for just $1. $1 today to give us a trial and a test. If you want more trade ideas, more trading signals, and above everything else, good trading education. Because we don't want to just give you a fish. We want to teach you how to fish. And if you use some of the techniques that we teach you guys in our private trading community, trust me, guys, you guys will turn into very good traders. You'll use great risk management skills, and you'll see your account grow. If you've been in a trading slump, if you've been seeing your account go lower and lower and lower, then I highly recommend that you join our private community. I highly recommend that you come in and get the training that you should be looking for. And for the sake of this, well, I'm not going to go into all the details now, because what I was going to tell you is that we sort of predicted what could potentially happen in these pairs well in advance. And we usually do that through our weekly outlook. We give you guys a battle plan on what you should be looking forward to even before the week begins. Because the more you look at these charts, the more you'll be able to sort of discern and sort of predict. It's not saying it's going to be accurate all the time, but you'll get an idea of what could potentially take place. So then we give you guys those ideas early on in the week. And then throughout the week, we send you guys trade signals, trade ideas, whenever we see those high probability ideas form in the market. But we trade over 20 different currency pairs. So then any day you can get you can get a different currency pair that you could trade. But if you scroll down, we have our Grand Slam trading strategy, which I believe is really part of the cornerstone of what we teach within our private trading community. It's all about reward to risk ratio. If you have a lower amount of money, and if you want to grow your money pretty fast, then you can use this strategy right here, the Grand Slam trading strategy.
it works pretty well. But we have our monthly training videos right here. This is our training vault section. And then we have our potential trading ideas, potential trading setups right here. Most of our trading ideas and trading signals, especially when we send them in real time, they will be sent to our private Telegram app or Telegram channel. So then make sure you guys join that channel if you do become a lab member. But we have our webinar recordings here, our weekly Outlook videos here, which is great and excellent. And then we have a bunch of resources in our private community right here. But that's that. I don't want to go into too much details about what we're offering. I highly recommend that you join if you want to take your education to the next level and at the same time receive high probability trade ideas and trade signals. But our next trading session will be tomorrow, 1 day and 23 minutes from now will be our next trading session. So then hopefully you can join us for that next live meeting. But that's it, guys. I don't want to sell too much to you guys. Just make sure you guys follow these trade ideas. Make sure you wait for price to confirm bearish sentiment, and I believe we may see that happen shortly on the US dollar, Japanese yen, and even on the Euro USD. But are there any questions before we decide to close out today's session? It could be a question on trading, or it could be a question about our private trading community. Any question, you can ask that question right now, and we can answer your questions. If not, then we can definitely close out. But we'll give you guys a few seconds to think about what you may want to ask. And I know Marvin wants to share something.
Yeah, I was going to say, if you guys want more videos like this, or let's say you want us to do more videos or have more maybe sessions like this, we encourage you just to
to like, share, comment. Like, even on this particular video right here, like, I know we're going to post this video. Just share with the world what we're doing, because we're offering a free service to the masses, and we really want to help as many traders as we can. However, we do exclude a lot of our really, really good stuff to our lab members. But the stuff that we're sharing with you guys on these free sessions is good, and it's better than probably 90% of the trading coaches out there that teach different stuff. So then, if you guys are blessed by what we're sharing, please like the video, please share, please comment. Just let us know that you're watching these videos and that you're being blessed and benefited by the videos, and it will encourage us
to do more videos.
To do more videos, and to even go beyond just Technical Tuesday. You never know, we can do more teaching stuff to help you guys just on the basics of just trading and how you should approach trading as a lifestyle. But other than that, thank you guys so much for watching. We really appreciate you guys, and we'll definitely see you guys next week on the next Technical Tuesday session, and see you guys soon. All right, talk to you guys later. All right, okay, bye.